Question 56. Jonah sells his partnership interest in a general partnership in order to pay his largest creditor, Whale Enterprises. Jonah's sale of his partnership interest to Whale will A. Dissolve the partnership. B. Make the creditor a new partner. C. Either A or B. D. Have no effect on the partnership. Correct answer is D. Have no effect on the partnership. Selling a partnership interest does not automatically dissolve a general partnership. It also doesn't automatically make the buyer, Whale Enterprises in this case, a new partner. The existing partners would need to agree to admit Whale as a new partner. The sale simply transfers Jonah's financial interest in the partnership to Whale, meaning Whale is now entitled to Jonah's share of profits and losses. However, Whale doesn't gain the right to participate in management or other partnership decisions unless the other partners agree. Question 57. A property owner operating a factory on it decides to sell the property, then immediately leases the property back from the new owner to continue operating his factory. This practice is called A. Reverse sale. B. Sale leaseback. C. Real property interest swap. D. Such a practice violates the UCC. Correct answer is B. Sale leaseback. This is a common financial transaction where a property owner sells their property and then immediately leases it back from the buyer. It frees up capital for the original owner while allowing them to continue using the property. Question 58. An investor wishing to hedge against losses in his capital due to inflation would probably seek to invest his funds in A. Corporate securities. B. Bank certificates of deposit. C. Government bonds. D. Real estate. Correct answer is D. Real estate. Real estate is often considered a hedge against inflation. As the general price level rises, inflation, real estate values tend to increase as well. This is because the cost of building materials and labor often goes up with inflation, increasing the replacement cost of existing buildings. Additionally, rents can also increase with inflation, making real estate a potentially attractive investment during inflationary periods. The other options are generally less effective as inflation hedges. A. Corporate securities. While some stocks might keep pace with inflation, others may not. The performance of corporate securities is tied to many factors beyond just inflation. B. Bank certificates of deposit. CDs typically offer fixed interest rates, which may not keep pace with rising inflation. The real, inflation-adjusted return on CDs can be negative during periods of high inflation. C. Government bonds. Similar to CDs, government bonds often have fixed interest rates, making them susceptible to losing value in real terms during inflation. Question 59. A financial loss suffered by a party due to a breach of contract is called A. Damages. B. Breach. C. Laches. D. Fraud. Correct answer is A. Damages. Damages are the monetary compensation awarded to the injured party in a lawsuit to cover the financial losses they suffered as a result of the other party's breach of contract. They are intended to put the injured party in the position they would have been in had the contract been performed as agreed. Question 60. A note whose interest rate is tied to a movable economic index is A. Index loan. B. Inflated note. C. Running note. D. Adjustable rate mortgage. ARM. Correct answer is D. Adjustable rate mortgage. ARM. While the term index loan might seem like a good fit, the more common and precise term for a loan with an interest rate tied to an economic index is an adjustable rate mortgage. ARM. ARMs are specifically designed to have interest rates that fluctuate based on a chosen index, like the prime rate or LIBOR. LIBOR is the basic rate of interest used in lending between banks on the London interbank market and also used as a reference for setting the interest rate on other loans. An ARM enables the lender to periodically adjust a loan to more correctly track the changing cost of money. Question 61. A property that is transferred between parents and their children is exempt from A. Property taxes for a year after the date of sale. B. Reassessment of its property value for tax purposes. C. Being taxed on its objective value. D. Being taxed on its subjective value. Correct answer is B. Reassessment of its property value for tax purposes. In many jurisdictions, transfers of real property between parents and children are exempt from reassessment for property tax purposes. This means that the property's assessed value, used to calculate property taxes, will not be increased simply because of the transfer. This exemption helps families pass property down without a sudden increase in property taxes. However, this exemption often has limitations and specific requirements, and it's not universal. It's always best to check local laws and regulations for the most accurate information. Question 62. When a deceased person's real property under the jurisdiction of the probate court is sold through a real estate broker, the amount of the broker's commission is determined by the A. Deceased's closest relative, B. Estate administrator, C. The probate court, D. Real estate commissioner. Correct answer is C. The probate court. When real property within an estate is sold through probate, the court overseeing the probate process determines the broker's commission. It's not set by the deceased's relatives, the estate administrator alone, or the real estate commissioner. The court approves the sale and the commission to ensure fairness and protect the interests of the estate's beneficiaries. If the broker's commission is not ordered by the court at the confirmation hearing for the property sale, the broker may request it in writing, and the court may modify the order to award a commission. Question 63. A broker's acceptance of a buyer's deposit on behalf of the owner is based on the terms usually included in the A. Listing agreement, B. Title report, C. Deed of sale, D. MLS. Correct answer is A. Listing agreement. The listing agreement between the seller, owner, and the broker typically outlines the terms under which the broker is authorized to accept deposits from potential buyers. It specifies how much of a deposit is acceptable, how it should be held, and under what conditions it can be returned or forfeited. The listing agreement establishes the agency relationship and defines the scope of the broker's authority. Question 64. A broker wishing to legally enforce his right to a commission for procuring a 6-month rental agreement must A. Have a special license for being a rental broker. B. Have a written agreement signed by the property owner. C. Be able to prove he had an oral agreement with the property owner. D. There are no commissions for procuring rental agreements, only for outright sales. Correct answer is C. Be able to prove he had an oral agreement with the property owner. Oral agreements for services related to real estate, including procuring a rental agreement less than 1 year, can be enforceable in many jurisdictions. The key is that the agreement must be able to be performed within 1 year to avoid the statute of frauds requirement for a written contract. Since a 6-month rental agreement falls within that time frame, an oral agreement, if provable, could be sufficient. Question 65. The person who is primarily responsible for disclosure to a buyer of the existence of a Mello-Roos tax assessment on a piece of real estate would be A. The seller, B. The buyer, C. An attorney, D. The escrow agent. Correct answer is A. The seller. While other parties, like the real estate agent, might also have a duty to disclose, the primary responsibility for disclosing the existence of a Mello-Roos tax assessment falls on the seller. The seller is the one who is aware of the assessment and has the legal obligation to inform the buyer of this material fact. Real estate disclosure laws typically require sellers to disclose known material facts about the property, and Mello-Roos assessments are considered a material fact. Mello-Roos is a special tax in California used to fund local infrastructure, like schools and roads. It's added to property tax bills in designated districts and must be disclosed to buyers. These taxes are not permanent and usually last until related bonds are paid off.